Hi, this is the weekly recap on the Rhino. Today is October the 14th and it is just after 8 a.m. UK. The market makers have started playing, and so even though pricing may not be 100% correct, it's about okay, and the futures are more or less where they closed on Friday. So that should be a fairly accurate picture. So this is the regular trade. Again, this looks a little bit optimistic to me, but the trade is doing well anyway. Last week we did, if you remember, early September, I added a narrowing layer or broken butterfly layer. So I didn't this one didn't count as the fourth broken butterfly. So we've had a fourth one, then a fifth one, last week on the 8th, and then on the market jumping I placed a PCS. There was enough capital, so no need to control capital with a short condor by pushing up the lower long puts. I chose not to do a straight RH or reverse RV or PCS on upper longs because I wanted to be a little bit more safe in case the market would retrace a little. I invite you to check the various impact on the Greeks according to where you place your PCS. It is true that if I placed a reverse Harvey, I would have got more premium, probably less Vega, additional Vega exposure, but at the same time at 29.75, 29.50, it would have been more sensitive to a reversal. So I'm happy where it is now, and as you can see, this is a good looking trade. Now we are 32 DT. The first target level was 2500 last Friday. Now I'm hoping to get about 1500, and maybe it will be closed early somewhere around let's say by end of month. So by end of month, if it stays in this area, we could actually make good money. I do not anticipate the market from running much higher, and if you can see, even if I was not to do anything, the sweet spot takes us above the all-time highs. There's a good cover with negative delta. Vega is not too strong, so of course if we were to get back maybe a little bit more inside the tent, let's say 2900, 2930, that would be absolutely perfect, and of course without much of a vol surge. So now let's move on to the BTB, the buy the book trade. Buy the book trade is a little bit more risky. The delta is still okay. There's still some theta here, but it is probably more sensitive to a bearish bias. So I can hope that the market will stabilize and retrace a bit in this area. Otherwise, it is always possible. There's still good premium here. I mean, if I was just to put another reverse Harvey on the belongs, there's still about 7.5. So this is something that can be done, and it is acceptable in the BTB guidelines. So we'll see how it goes. I think 20 ADT is $2,000. Maybe I will take profit by then. I'll see how it goes. If it keeps hovering in the same area, and I invite you to watch that market outlook video, it should be okay, and of course it will make better money if the market retraces a bit. December is no problem at all. Very smooth, very flat delta, making good money, so really no problem whatsoever. And the BTB is exactly the same. And again, I'd like to remind you that when the volatility level or volatility environment is average, there is absolutely no need to distinguish BTB to Ray. Actually, in this environment, the two will converge. That said, I will still keep more flexibility on additional layers for the regular trade. That's it for now. Good trades, not much to worry about. There is good support on 28.90, and we had a low some time ago on 28.25. So really, and as you can see, there's absolutely no risk on the upside. So this trade is looking good. Okay, so I'll be later available on Slack, and as usual, considering time difference, mostly in the morning Eastern Time. Bye for now.